In the late 2010s, WireCard appeared unstoppable. Investors called it the future of European finance. Banks trusted it, regulators defended it, and the market rewarded it with billions of dollars in valuation. WireCard became Germany's fintech champion, a rare European technology company capable of competing with Silicon Valley and global payment giants. WireCard processed digital payments. Every online purchase, every card transaction, every transfer generated fees flowing through its global network. The company expanded aggressively through acquisitions. Subsidiaries appeared across Asia, the Middle East, and Europe. Growth looked extraordinary. Investors poured money into WireCard. Its valuation surged past traditional German banks. To the market, WireCard represented the future. But behind the growth, questions were beginning to emerge. Journalists and analysts noticed inconsistencies buried deep inside the company's accounts. Much of WireCard's reported growth came from obscure third-party partners in Asia. Few outsiders truly understood how the money moved. Revenue appeared unusually complex. Profits flowed through layers of subsidiaries, partner companies, and offshore arrangements. In 2019, investigative journalists began publishing reports alleging accounting irregularities and possible fraud inside WireCard. The reports triggered violent market reactions. Billions disappeared from WireCard's valuation in hours. WireCard denied all allegations. Executives claimed the company was under attack by short sellers manipulating the market. Short sellers believed the numbers did not add up. If WireCard collapsed, they stood to profit enormously. Instead of targeting WireCard, German regulators targeted the critics. Authorities even banned certain forms of short selling. For years, auditors signed off on WireCard's accounts. Investors assumed the financial statements had been verified. Then came the discovery that changed everything. Nearly $2 billion in cash could not be located. The money was supposedly held in Philippine banks, but the banks said the accounts never existed. Within days, confidence evaporated. Investors rushed for the exits as the company spiraled toward collapse. Executives scrambled to contain the disaster, but the financial hole was too large to hide. Then the company's chief operating officer vanished. International authorities launched a global manhunt. WireCard officially filed for insolvency. It became one of the largest corporate frauds in European history. Pension funds, retail investors, and institutions lost billions. Confidence in Germany's financial oversight was shattered. The scandal exposed deep failures inside the regulatory system designed to protect investors. The collapse raised uncomfortable questions about the global auditing industry and its ability to detect fraud. In the race for growth, markets often reward expansion first and ask questions later. WireCard sold more than a business. It sold a story investors desperately wanted to believe. The deeper investigators looked, the more complicated the money flows became. Shell companies and third-party entities created layers of distance between the reported profits and the underlying business. In financial markets, perception can become reality, until reality suddenly returns. The collapse dominated international headlines. Europe's fintech miracle had become a cautionary tale. Authorities launched criminal investigations spanning multiple countries and financial institutions. The scandal damaged trust not only in WireCard, but in the broader fintech industry. The warning signs existed for years, but during periods of market euphoria, skepticism becomes unpopular. In the digital economy, enormous fortunes can be built on assets investors may never physically see. WireCard's collapse became a symbol of unchecked ambition, weak oversight, and financial illusion. The scandal raised a deeper question. How many other financial structures rely primarily on trust? In finance, confidence is everything. And when confidence disappears, even billion-dollar empires can collapse overnight.